Welcome to AARO Voices, the podcast for American expatriates around the world. Today, we're talking about Fbar and Fatca and why reform is urgently needed for Americans overseas. These laws were designed to combat money laundering and offshore tax evasion, but in practice, they often affect ordinary Americans abroad. Americans who are maintaining normal bank accounts in the countries where they live and pay taxes. Let's begin with Fbar, the Foreign Bank Account Report. It originated in the Bank Secrecy Act that was passed in 1970 to combat financial crime. Under Fbar rules, U.S. citizens and green card holders must report foreign financial accounts if the total value exceeds $10,000 at any point during the year. The $10,000 threshold was established back in 1970, and it hasn't been increased with inflation. For Americans overseas, that threshold is easily crossed through everyday banking, checking accounts, savings accounts, and retirement accounts, or joint accounts with a non-U.S. spouse. The reporting requirement itself is relatively simple. The penalties are not. However, some people aren't even aware that they have to file the Fbar report. Non-willful violations can carry penalties of up to $10,000 per year. Willful violations can result in penalties of up to $100,000 or up to 50% of the maximum unreported account balances. The difference between a non-willful and willful approach is not always clear, but it is critically important. A recent case, the United States versus Tuncay Saydam, illustrates just how high those stakes can be. Tuncay Saydam is a dual citizen of Turkey and the United States. He failed to file the Fbar reports for the years 2013 through 2017. In March of 2021, the IRS assessed him $437,564 in willful Fbar penalties. In a jury trial, the jury found Mr. Saydam liable for willful violations for all 5 years. With interest added, the total amount due came to $544,933. The court declined to reduce the penalty. For Americans living overseas, this case is deeply consequential. His reporting failure was judged as willful. This judgment triggered penalties exceeding $500,000. The ambiguity around what constitutes willfulness and whether it requires intentional concealment or whether it can include just reckless disregard creates a substantial uncertainty for expatriates. The Saydam case underscores a broader policy concern. The enforcement tools built to target financial crime can also apply to Americans conducting their ordinary financial lives abroad. So that's Fbar. Now let's look at Fatca. It was passed by Congress in 2010. Fatca requires taxpayers worldwide to identify and to report their foreign financial assets to the IRS. Fatca also requires foreign financial institutions worldwide to identify and to report accounts held by U.S. persons to the IRS. Institutions that fail to comply face a 30% withholding penalty on certain U.S. source payments. The result has been widespread compliance pressure on the banks with unintended consequences. Americans abroad have experienced bank account closures, denial of investment services, mortgage rejections, business complications, and some institutions simply decline U.S. clients altogether, all because of Fatca. Don't forget, a fundamental feature of U.S. law is citizenship-based taxation. The United States taxes its citizens worldwide, regardless of where they live. While foreign tax credits and the foreign earned income exclusion may prevent double taxation, they do not reduce the requirement to file Fbar and Fatca returns. So, if you're an American living overseas, here are some key points to remember. Number one, if any or all of your foreign accounts exceed $10,000 value at any point during the year, you must file an Fbar. Number 2, Fatca reporting may also require disclosure of foreign financial assets on IRS Form 8938, which is sent with your yearly tax return. Number 3, filing Fbar and Fatca is about reporting, not necessarily about owing tax. Number 4, the rules are complex and professional guidance is often advisable. Number 5, advocacy matters. These laws can change, and AARO is actively working toward reform. The Association of Americans Resident Overseas believes reform must focus on fairness. AARO advocates for simple reporting, which combines all reporting requirements into one form, clear standards that distinguish between willful evasion and non-willful mistakes. They advocate for reasonable Fbar penalties and for protection against discriminatory banking practices caused by Fatca, and ultimately residency-based taxation. Enforcement should target genuine money laundering and genuine tax evasion, not ordinary Americans managing their accounts where they live. Here are some final thoughts. The Saydam case demonstrates the magnitude of the penalties at stake. Over $500,000, including interest for reporting failures. Compliance is essential, but so is reform. Americans abroad are not tax dodgers. They are members of a global community that deserves a fair system that aligns with the realities of international life. AARO will continue working to make that case. So, if you've had a problem with Fbar or Fatca, email us at contact@aaro.org. Your help in our advocacy efforts is valuable. Learn more about AARO at aaro.org and join us moving forward. This is Gary Zerker for AARO Voices. Thanks for listening. See you next time.